You were listening to chartingwealth.com for Friday, the 16th of March, 2018. I am traveling today in an airport, and there may be some background noise. You will have to forgive us. We are also working to get the show out to you tomorrow at the close of the market. It may be getting out a little late due to some internet complications and travel things, but we will get it out to you over the weekend. Let's talk about what went on in the market on Thursday as we go into Friday. We see the S&P 500 down 0.11%, the Qs, the NASDAQ 100 down 0.15%, TLT 20-year bonds up 0.01%, and gold down 0.66%. As we look at the SPY, we see that the derivative oscillators losing downward momentum on the weekly chart. Price percent oscillators continuing to move down, albeit slowly. We do see a green up candle for the week. Now remember, that's the average pace. As far as the Heikin Ashi candlestick goes, it is calculated differently than your average candlestick. Great training at our website for that. Now let's talk about what that candle shows us. Well, it shows us the average pace is up. It is pushed through the 2-day trend line. We're still, though, in a down move. All things being equal, the market always tends to move in the direction of the largest chart, and that weekly chart is down. As we look at the 2-day chart, we see that indeed up movement over the prior two candles, that is a candle in the 9th of March and the 13th of March, show us that we have up movement. We have a spinning top over the last 2 days, and of course that means that we've got a great deal of indecision tending down on the S&P 500. The 2-day is of course still in a confirmed up move on that 2-day chart, and it is above the latest weekly trend line that we have. And lastly, we have the 4-hour chart that crossed over going down in the morning on Thursday and then followed up with more down movement in the afternoon. That is the price percent oscillator crossed over going down, derivative oscillator still heading down. Also, price movement is sitting right there on the 2-day trend line. So again, we can see we now have 2.5 days of tracking down movement after it peaked on the morning of the 13th on the S&P 500. So continue to keep your eye on things. Remember, we don't have a trade now because the 2-day is still up. But again, interesting things happening on the S&P 500. Now, the Qs, that is where we had our weekly vertical crossover at the end of the prior week, ending on the 9th. It has a nice size up candle so far the week, even with some down movement. Derivative oscillator still negative. Price percent oscillator is continuing to hold itself up, but is not separated very far from that red signal line. As we delve a little deeper, we see some more things going on. Again, on the 2-day chart, things are still moving up. We do see that down price movement has set price on the candle right there on the 2-day trend line. Derivative oscillator is flat. Price percent oscillator still headed up some, but again, not super strong. What do we see on the 4-hour chart? Well, of course, we see that it peaked out back on the 13th, that is the morning of Tuesday the 13th, and has been headed down since then, but has not penetrated the 2-day trend line. It did cross over going down on the afternoon of Wednesday. So we'll continue to watch. Again, we've got some down movement on the 4-hour chart, but it's been sitting at about the same point for a day and a half, almost 2 days. Well, going actually out to about 2.5 days. So we'll see what's really happening there. Again, we had that weekly vertical crossover. Things popped up and have sort of rolled back. We'll just wait and see what we see. If you did not get in then, and we do see this 4-hour chart cut back over and start heading up on Friday or at the beginning of next week, might be a jumping in point for those of you who didn't jump in on that up move. And again, we'll continue to keep a close watch on the 2-day and the weekly chart. Okay, let's go to the TLT, the 20-year bond. What do we see going on there? Well, it looks like bonds have bottomed out some. Now, we don't have a weekly vertical crossover yet in that regard, but we do have some up movement for the week. Bonds sort of bottomed there at the week ending the 23rd, it appears. 2-day chart has crossed over, of course, a few days ago, going up. Derivative oscillator losing energy, price percent oscillator heading up, but not near a crossing yet. We'll continue to watch bonds. And then we see on the 2-day chart, of course, it crossed over going up back on the 5th. Really sort of rolled sideways And then only over the last two-day candles, so the last 4 days as it actually moved up, the derivative oscillator is, of course, heading up quite strongly, and price percent oscillator is growing in upward movement. And we'll just wait and see if and when that weekly chart rotates over going up. And, of course, we see the 4-hour chart maybe peaking out for the time being. It really sort of hit its mark over the last day and a half, up over the morning on Thursday. On Thursday, and actually down on Thursday afternoon. But the derivative oscillator continuing to gain energy, price percent oscillator heading up. That's where we are on TLT, 20-year bonds. Let's go lastly to gold. Start off with that weekly chart. We see that gold is going to be a weekly vertical crossover going down. It sure looks like for this week. We'll give you that news tomorrow for sure, over the weekend with our comprehensive review and forecast. That's when we announce weekly vertical crossovers, but it sure does look close. And of course, gold has been going down since it peaked out all the way back to the 26th of January. Really sideways, tending down for quite a while, but it looks like we will have a weekly vertical crossover ending the week. We look on the 2-day chart. Of course, it crossed over going down all the way back on the 7th of February, then up for a few days, then down and sideways, now still tending down. Derivative oscillators kinked over the last 2-day candle heading down. Derivative oscillator, that's a price percent oscillators kinked over heading down. Derivative oscillator really is losing downward momentum. So again, remember, it's our price percent oscillator that's our big oscillator, and we can sure see it heading down even more strongly now. And as we go to our last chart, we look at the 4-hour chart, and of course it crossed back over going down on the morning of Thursday the 15th. Downward movement in the morning, further in the afternoon, penetrating the 2-day trend line. So we'll continue to keep our eye on the 4-hour chart, and hopefully it will start working for us better than it has been over the last many days, particularly for the month of March. Maybe it will get better, and the March madness on the gold 4-hour chart will end. Thank you so much for your patience today. It's always difficult when we travel because, as you know, we can't do these reports until the market closes, and we are dedicated to bringing it out to you every single day. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.